go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today, Ayesha Tariq, co-founder of Traderade. Ayesha, welcome to the pod.
Thank you. Thank you so much for having me back. I love being back on the show.
Not your first rodeo, but since you were on, there's been a bit of an upgrade. Congratulations on your Fox Business segment. I believe that went very well.
Thank you. I mean, you were watching. What did you think?
No, absolutely. I'm just, and now you have to come back to the levels of a mediocre podcast. It's not a syndicated experience.
Never. I did say that it was because of you that I got my start. You were my first financial podcast.
Stop it, but please go on.
Yeah, no, I love it because, where you start is very important.
Yes, let's go. Let's dive right into it. Right. So, market rally. I guess the question on everyone's lips, is it a bull run in a bear market still, or is this something else? We're seeing a bit of a pullback. Still not 100% sure. For me, this is crossroads territory, and not a lot of conviction going long here. I can't remember a period where everyone was as 50-50 as we are now.
Right. I mean, so look, I think even this, it surprised me also a little bit because it's gone on for a little longer than expected. And I think there are a couple of things that have fueled this, but just to put your question to rest before I begin, okay. I still think this is a bear market rally. I don't think this is the start of a new bull market. And if you go back in history, you'll see that typically bear market rallies can rally anywhere up to even 25% from the lows. So we're within that range still. And I think there are a couple of things that have been fueling this. We started off with earnings. Given what we've seen with inflation and with freight costs, I think a lot of the analysts overestimated the costs and the impact that it would have on earnings. And to be fair, even I did. I thought earnings would come in much poorer. And you know what? They have.
Yes. But
the difference is they've beat estimates, especially on the bottom line. So they've beat EPS estimates. So I think the analysts went very bearish. And so when these guys have now beaten estimates, the market thinks, hey, everything's great. But in effect, if you look at the numbers quarter on quarter, they are declining and things are not very good. So if you take Tesla, for example, their free cash flow went down by 72% quarter on quarter. That's a lot.
No, absolutely. But I say we are allowed as financial participants and analysts and speculators to make mistakes and to say, hey, we were wrong. But as long as we don't say, hey, we didn't have those opinions at all and go back and delete tweets or delete videos and stuff like that. We are at the end of the day only human.
Absolutely. And the other thing about analysts, especially with the big firms, they have to be a little bit more conservative, particularly in a bear market. They can't go all big hunky-dory with their estimates and with their revenues because they have to err on the side of caution. Yes. For the sake of their clients.
Exactly.
Right? So they have to take a more conservative approach.
Yes.
So I think that kind of started the bear market rally where, stocks started popping on earnings because they were beating estimates. So people started thinking, oh, great. I mean, everything's fine.
Yes.
And that was followed up by the FOMC, by CPI data, by unemployment data, and finally the Fed. And if you look at all of these, CPI came in slightly better, top line. Your unemployment numbers came in tighter, lower, right?
Yes.
And finally, you have the Fed.
Yes. But
So
your unemployment, sorry, but to me it's sort of strange because all the factors that you would expect in a recession, some of them are missing. And the last time you said that technically we are in a recession, but the Fed keeps pointing to unemployment data and saying, "Hey, look at that. No, we can't be," and they're just pointing at that one thing. You know what I'm saying?
Yes. Now, what's interesting is if you read the minutes from this time, they've actually acknowledged that unemployment will increase. And they've actually acknowledged that GDP is slowing down. So they didn't use the R word per se, but everything they said points towards them tightening in. They know they're tightening into a slowdown, right? So they're not going to use the word, but they know it's a perfect recipe for a recession. Now, technically speaking, they cannot use the word until sort of the NBER comes out with the definition and says, okay, we are in a recession. So
just
people refrain from using it.
Yes, just explain that last part for people that might not know what you're talking about.
Sure. So the NBER is the National Bureau of Economic Research, and they basically declare whether it's a recession or not. But the problem there is they can only declare it once it's already happened, right? Because they need to see the data tell us that we've had 2 consecutive quarters of negative GDP growth. And by the time they can actually come out with that, we're already in a recession. So
is that 9 guys? Is that 9 people?
Because I'm not sure.
I'm not sure because I keep saying that someone referring to, and I think this is the news media, and they're referring to a bunch of old men or old white men or whatever is going to tell us if we're in a recession or not. And I think it's funny because this is the way that things have always worked. This is nothing new. This is just the process.
Exactly.
So by the time that they come out and say, "Oh, it might have been long gone."
Yes, no, of course. However, this time I do think that it will be a little bit more protracted. We might have a longer recession, or at least a longer slowdown. Let's say
protracted. That's
the way
that's my view as well. It's not a popular view, which I view as a very good thing because we're not in consensus. It feels like this week I went back to 2020 with meme stocks. It feels like that. You know what I mean? It's like that AMC, Reddit, Wall Street bets. It was back. A teenager made $1 bazillion by betting these families' fortune or a chunk of it on BBB. What's it? What's that?
Bed Bath and Beyond.
Just keep saying BBB. Why are meme stocks back? I guess is my question.
I don't know why they're back, but I think it's all been fueled by the same thing, the same reason we're having the rally. It started off possibly as, hedging into the Fed minutes, hedging in, not really the Fed minutes, but the FOMC.
Yes.
And, so when you have all these hedges and the hedges are taken off, the markets start popping, right?
Yes,
so, and that's exactly what starts, or probably what started the rally, and it just kept on going. Then you have, these smaller stocks and people piling into the smaller stocks. And, I don't like the word, But you you have people piling into these smaller stocks, and then one starts, the other starts, and it keeps fueling. But I hear that there may be more to the Bed Bath and Beyond rally than just people piling into it.
Yes.
I understand it's been more orchestrated by funds, or a fund to be precise.
Allegedly. Let's say
Alleged,
allegedly.
yes.
Yes. Because we don't have proof
Um,
at the moment.
no, but we do know that the fund did sell their shares, so we know
Yes.
they made money on it. Whether that was opportunistic or whether it was because they orchestrated everything, we
Yes.
wouldn't know.
Yes.
But what's challenging now, though, is a big player is out,
Mm-hmm.
or a few big players are out,
Mm-hmm.
and you might have a lot of people stuck holding the bag, as they did with GME and AMC and a few of the other ones, unfortunately.
Business as
So
usual. I'm
yeah,
laughing,
I
but
know,
it's
I know, but
it's
it is sad though for many.
it is.
Um,
And we don't like to laugh at people losing money in the stock market, but it's like I've got this saying, play stupid games, win stupid prizes, because it's like you're doing it over and over and over again. Just like that's why I said it feels like 2020 is back.
yes, yes, and I know a lot of people did get caught out even then, and I think some people are probably still holding it like 200, 300 for
Uh,
GameStop and all of them.
exactly.
And I don't know if that'll ever be achieved. I don't, for Bed Bath and Beyond, I'm sure it
Yes.
won't, because
Yeah.
that's a company that's going to be restructured. They can't pay off their debt. They are really in trouble. So that company could actually go to zero. So it's not like
Ooh.
a GameStop or an
Yes.
AMC that
Yes.
who actually have assets and who actually do something.
I'm with you.
Um, yeah, but
Uh,
Bed Bath and Beyond, they have assets, but they are over leveraged. They've hired a firm now to restructure the company. So they're really in trouble.
Wow,
And
that's
that company
interesting.
could actually file for bankruptcy.
Mm.
So unlike the other ones, I think this one it was such a dangerous play, such a dangerous play.
Let's
And
yeah. Yeah, no,
it's fueling more, it's fueling more of these smaller stocks as well. So I hear today apparently the grilling stocks are getting bid up. So I don't I don't know how long this is gonna last, but at some point it's all gonna come crashing down like a house of cards.
I
We've seen it play
really,
out
I
before.
really thought the dumb money left the market, and then it's like, oh no, Adam Neumann is a new company. It's it's pivoting a startup, a failed startup with VC money. Um, and it's sort of couple, it was just the timing is strange, or it's coincidental maybe, but with the meme stocks now we have a large inflow of money into what looks to me, and I've looked at the model, I've looked at what they're proposing. It's like they call it reinventing retail or rental, sorry.
Mhm.
What is your take? Would you invest in whatever he is selling?
Um, no. Having said that, I think what he did with WeWork
Yes.
in the beginning, so the startup of
Mm.
WeWork, and how he transformed offices and how he transformed the workspace was pretty amazing. The man
Mm.
had a vision.
Yes.
He wasn't a bad businessman to begin with.
Mm.
He had enormous drive, but I think that drive and greed got the better of him.
Okay.
Okay. And sometimes when you're in a position, and I've seen this a lot with because I've been a corporate banker for a long time, so I've seen companies rise and fall, and I've seen owners do the silliest things
Mm-hmm.
just so they don't collapse. So it's
Yes.
like you're digging yourself a larger and larger hole every time. So what Adam Neumann did was he got carried away with his spending.
Mm-hmm.
He was bleeding cash because he wanted to expand too fast.
Yes.
He didn't realize how much cash, or rather, he did realize how much cash he was bleeding, and he just got more and more money and more investors just to put in money. to plug a hole that was not, you know,
Yes.
that was still a hole. He
Yes,
couldn't
yes, I'm
plug it.
with you. I'm with you. But he is
Yeah,
I think what people don't understand is I've never been in a room with him, but I know charismatic people just from talking to people on a weekly basis. He is a super charismatic person.
absolutely,
I think,
absolutely.
yes, if you spend like 50 minutes, he will sell you the world and you will just put everything, so give him everything. That is sort of my take.
No doubt. I mean, look, when they first wanted to list back in 2019, and I saw this prospectus come out, right? Like the S1. And it was very interesting to me because they were like talking about things he had, the accounting standards were different or the accounting terms were different. So I actually went through the whole thing. And it was like very fascinating. So I went through the whole thing. I watched a lot of his videos. I watched a lot of his interviews. So I mean, probably spent a good amount of time following this
Mm-hmm.
man.
Yes.
He is extremely charismatic. You're right, but at the same time, he has a quality that sort of inspires confidence in people. So
Mm.
like people like Jamie Dimon were taken in by him.
Yeah.
Okay, so he was
Yeah.
backed by JP Morgan and Morgan Stanley. And
Yes.
that's not an easy thing to pull off, right?
Yes.
Um,
No,
he
it's not.
had he had some fantastic backers. And the reason he could do that, because he's not only got charisma, but he's also got like a mixture of childlike wonder, let's say. He's got this
Yes.
boyish charm about him.
Okay. Should
Okay.
I start
And
should I start walking barefoot in the street as well? Would that help? Is that part of, is that part
you
of
need
the
to grow you need to grow your hair out
there
also a little
and
bit.
walk barefoot and then people will just go, yeah,
Yes.
yeah.
But then this is the thing with people, right? So even if you look at like Elon Musk, or you look at even Steve Jobs for that matter, all these people are a little eccentric,
A
okay?
little.
And
Sorry, a
okay,
little. That's putting it lightly. Yeah, but I get your point.
quite a lot.
They are quite a lot centric.
Yes.
Yes.
So I think people kind of feel that you need to be a billionaire, you need to have that flair. And if somebody is that confident with that much flair, he knows what he's talking about. And
Hmm.
even if he doesn't, he can pull it off. And he
Yes.
did pull it off for quite a long time.
Yes.
I mean, to be fair, he built quite a big company, and the
Yes.
company still exists till
Yes.
today because
Yes.
he did build a big company.
I'm with you.
So I think, yeah, so I
So is
think
today
he got
different? Is
super
it
carried
going to
away.
be okay? So you got carried away, but it's still standing. But is what he's busy with now? Is it? Has he learned from those mistakes and now it's going to be different? You know that age-old question: is it going to be different this time? We always ask ourselves: is it going to be different?
So I think so. I was just talking to my friend about this, and
Mm.
I told him a leopard doesn't change its spots. Okay, I think with Adam Neumann, he so the greed got the better of him, and so once, and we always make this joke, right? Like, so once a shark smells blood, that's it,
Mm.
right?
Over.
And he has already tasted the blood once, and he's
Yes.
gotten away with it,
Yes.
scot free, with a big payday.
Oh, interesting. It's going to be interesting.
Do you
I
really think he will change?
No, I believe in that humans are essentially you are what you are. Yes, there is capacity to change, but not not with those types of people. I think he
The
knows
question
I
is,
think he knows exactly what he's doing. That's my answer.
see, the question is, Rocco, does he need to change?
No,
If he's gotten away with it once and
exactly.
he got a payday, does he need to change?
No, because he has there are people online that are defending him to insane degrees. I don't know what it is with human nature to defend billionaires. I basically said the same thing that you said, or in the same line, and saying that there are hundreds of little small companies or medium companies that are actually producing a turnover and actually selling a product and can show this, and they can't even get a pre-seed, or they can't even get in a conversation with the VC, and there is this guy with this track record with all the money, and I was told, oh, you must be bitter and I need to be better. And I'm like, no, this is my opinion, fuck off. But this is the thing, is like, there are people who think the world of him, and anything, and because he's so charismatic, anything like you're saying that's a detraction through that, or their opinion of him, they are going to defend him to the death. So you're right. Why does he need to change? He doesn't.
Absolutely. And I honestly think that he will do worse this time, because the previous time, and I'll tell you why. Because the previous time, when he was poor, he had no money, right? So he did what he did with WeWork because it was a dream for him to make it big. Okay, so there was some sort of honest, let's say, motivation behind that, some kind of drive, which was, purely fueled by his heart.
Yes.
I don't think he has that anymore.
Yes.
I think now it's more of making back more money just so he gets yet another payday. And even the concept, I mean, I read a bit of the concept that, these guys put out. It didn't make a lot of sense to me. So, yeah, perhaps you could say at that time WeWork didn't make a lot of sense either. I don't know. I mean, we'll have to see more when more documentation comes out. But I think he's just looking for another payday.
Yeah.
At that time, it was more ambition. It was more of a dream. So the intentions were different. I would say, in a sense, they were purer.
Yes.
I don't think the intentions are so pure this time. I think it's more about just getting money out of the deal.
Yes.
So I think he might even do worse this time.
Wow.
Maybe
Ayesha,
the quantum might be not so big, but I think he'll do worse.
Let's see. Ayesha, before I let you leave, a quick take on Michael Burry. For those that don't know, he sold almost all of his portfolio. Some would say he sold on the low. We don't know as yet. He kept one company, Geo, I believe. Geo.
They're a prison.
Which is interesting. It's a prison independent private prison. Sorry, company, and it's linked with mental health as well. It's sort of a very bleak view that he's taking, that incarcerations are going to increase, and the mental health aspect, people are not going to get the sort of the treatment that they need, and therefore this company is going to do well. I'm looking at the state of the world. It's very hard for me to disagree with him, but it is. Don't you think it's a bit of an, throwing the baby out with the bathwater at this stage?
So look, I think, look, he did really well during the GFC.
Yes.
And he did well during the GFC because he caught something. I mean, I'm sure you've seen The Big Short.
Yes.
And I read the book before that. So his superpower is sort of like reading and digging through documents and stuff like that. Okay.
Yes.
It wasn't really foretelling what was going to come.
Yes.
He was looking through paperwork to find out what's going to happen. It wasn't that he was looking at something in the macro environment.
Oh, interesting take.
So,
okay.
Yeah. So it's not exactly. Let's not say he's a soothsayer.
No.
Okay.
Okay.
He did the work.
Yes.
He did the work, and he luckily did the right kind of work.
Yes.
Okay.
Yes.
And he got what he got. I wouldn't say it was all luck, but let's say what he picked up was luck.
Yes. Okay.
That he actually picked up the prospectuses and started going through them and reading them and all of that.
Yes.
So I'd say there was a bit of luck over there. But to say that he's a soothsayer just because he did well during the GFC, I would say is wrong. Nobody's a soothsayer.
Yes.
He's being careful, and I don't blame him, because I don't think you need to be a soothsayer to see what's going to happen. I mean, the economy is slowing down. The Fed has to tighten, and they're tightening
Mm.
into a slowdown. It will cause the market to fall. And we've spoken about this before as
Yes.
well. I think we're going to see a bear market. So it makes sense for him to sell out on everything and buy when the market goes down another leg.
Mm. No, I mean, I completely agree with you as well. And it's like, look, he manages more money than I probably will ever, and anyone on FinTwit for that matter. So I don't know why anyone, but it feels just like, oh, because of the enigma, I think, and the movie that came out. And
Mm-hmm.
I think to a bit of a degree, he is maybe allowed it to become a thing as well by going on Twitter and then deleting his profile, and then the way he carries himself. I think he could do with a good PR agency, or like or marketing or something. But it's just the
Right.
way that he's sort of gone about things makes him a big target for people.
Mm-hmm.
He's putting himself as a target instead of just going about his business, because of the Big Short, because of the fame and the legend of Michael Burry.
Mm-hmm.
Now people like to take him down and say, "Oh, you are wrong because of da da da," and you can see it gets to him. There's no doubt it gets to him, and it shouldn't.
No, but I do, yeah, you're right. And I don't think he always manages his emotions very well. He is a bit reactive.
Yes.
Yeah, I wouldn't call him the best investor ever, because I've been following a lot of his names, and a lot of his plays, they don't work out.
Yeah, exactly.
Yeah,
And that's the
yeah,
importance of doing your own research and following your own methodologies
correct.
instead of just following someone blindly. Ayesha, thank you so much for joining me today. If the listeners want to go and connect with you, find out what you're busy with, go and connect with other projects and stuff, where can they do that? Obviously, we'll link it in the comments, but they want to hear it
Yeah.
from you.
So I think my primary avenue is Twitter now. You can find me on Twitter, Ayesha Tariq. You can find me on LinkedIn. I write a Substack, so you can find me at aishatariq.substack.com, and of course on Traderade.com.
You are FinTwit royalty at the moment, aren't you?
I thought I was a darling.
No, you've ascended from darling to royalty, just because of the value. Yeah, but every day I check out your account, or I go and see your account, you just grew by another 1,000, which is totally deserved. Ayesha Tariq to 100,000 followers. It's a thing. It's going to be a thing.
Thank you.
Ayesha, thank you so much for joining me. To our listeners, peace, love, and prosperity. We'll catch you in the next one. Cheers.